Cayman Islands.
Money Sense is brought to you with support of OneTradeX. OneTradeX, the Cayman Islands' #1 choice for online brokerage.
Live from Radio Cayman Studio, this is
Money Sense, bringing an informed financial perspective to the Cayman community.
Good morning and welcome. This is Money Sense on Thursday, the 9th of July, with your host, Simon Caudry. I'm joined this morning by three guests, all from the CFA Society Cayman Islands. I have Christoph Barnett, I have Neville Hicks, and I have Georgie Loxton. Welcome and good morning, everyone.
Thank you.
Good morning, Simon.
Well, I thought the topic of this show this month is going to be about the various crises that are unfolding in the world. We've got crises in Europe, we've got crises in China, we've got a debt problem in Puerto Rico, and a nice early morning start to the day is to talk about various disasters and problems that are happening in various parts of the world. It's an important topic. There are many things going on, and I thought it's vital that we here in Cayman have a reasoned and considered understanding of this, because it does affect what goes on here in Cayman, what happens elsewhere in the world. And one of the biggest countries and economies in the world is that of China, and they've been going through some serious and really difficult challenges over the past few months. So I thought we'd start off with China and discussing what's going on there, and there has been some real problems in China. Neville, Christoph, do you want to perhaps just talk us through some of the facts that are actually on the ground, some of the realities of what's been going on, and then we can sort of discuss whether those are meaningful problems for the economy here in Cayman or whether they're meaningful problems for investors here in Cayman and what they should be doing about it, perhaps. So who wants to just talk about that? Christoph, do you want to start us off then, please?
Well, when it comes to China, we've sort of seen an economic miracle over the last 3 or 4 decades, with the economy growing at double-digit rates, which are the envy of the world. More recently, in the last few years, there's been talk of China slowing down, and that's coming down to 9, 8, 7, maybe as low as 3% growth, which many countries of the world would still love, but for China is a vast decrease in their growth rate. So we have that going on, and then meanwhile, more recently, this year, we've seen the local stock market increase as much as 100% in a year. And that has been on the backs of a lot of new participants, a lot of mom and pop individuals coming into the stock market. And what happens is those are a lot of inexperienced individuals. They come and they open a brokerage account. Before they stop reporting on the details, we had as many as 1 million new brokerage accounts per week. Now, these people are coming in, maybe they're putting in $5,000, $10,000 or equivalent in Chinese yuan, and they're buying on margin, which means that they're buying using leverage or debt. So if you buy $10,000 of stock, you're only required to put up $1,000 or $2,000 of margin, it's called. Now, what happens is if the stock goes from $10,000 to $12,000, you've made $2,000 on your $2,000 margin, 100% return. But the problem is, it's a double-edged sword. It can go down to $8,000, and you've lost all $2,000 that you had up. And so what you have is the market is held by a lot of weak hands, and so we've seen people crashing, their accounts going to zero, and thus the volatility. Everyone needs to sell now the same way they were buying on the margin.
Well, that's an interesting topic, and I'll pause talking about China for a second just to focus a little bit more on that, because you often hear people, when you're out at a bar, at a restaurant, wherever it might be, saying, hey, I made an awful lot of money, I only had to put down a couple of $1,000s, I made 50% returns. And when markets are going well, that's quite easy to do in many respects. It's basically the luck of just being in the market, I suppose. But there are real risks, as you mentioned, when markets do turn for the worse. If you've used other people's money to borrow, to invest, you're at risk of losing almost 100% of the money you've put down. And that's something that I think that a lot of investors, when they think about opening up brokerage accounts and borrowing money to do stuff, don't really give enough consideration to the risks that are involved in trading like that, do they?
Unfortunately not. You know, we're all excited about the big score, right? 3% a year doesn't sound very exciting and doesn't really compel us to take big risks. But if we think about it in a larger context, this is sort of a growing pain for the Chinese market in terms of everyone needs to learn, and unfortunately we don't learn unless we feel some pain, that markets are volatile. and to have a stable market. If you just think about stocks or any asset, the reason that prices will remain stable is you need a core group of people who are willing to hold on to the asset. If someone isn't willing to hold on, if everyone's just holding on for a little bit of gain and willing to sell at the drop of a hat, you will have volatility. Whereas in the more mature markets in US and Europe, you have a core group of people who said, I'm willing to hold on to the stock market. They aren't selling. They provide the bid, which is the ultimate buyer for the market. It won't go down past their mark.
Christoph, I think taking your point back a few steps to the mom and pop investors in the Chinese market, there was a recent survey that showed that the average investor in the Shanghai equity rally did not graduate from high school. So it's like you say, these are inexperienced investors who, are hearing word on the street that everyone's making a fortune in the stock market.
It's a bull market, right?
Yeah, and there's an old adage that says when your taxi driver starts telling you to buy equities, that's when you should be selling, right?
Or the Shushan boy.
Yeah. So that's precisely what's happened, and now we're seeing a massive unraveling of all this leverage, which is bringing things down much more rapidly than might have happened otherwise.
Well, that leads me to a little story. And I read the Economist magazine and encourage anyone who wants to learn a bit more about the markets to do so. But there's a story in that magazine a couple of weeks ago, and I'm not going to quote exactly, but I'm just going to summarize it. There was a company in China that used to make wooden floorboards, and it was having difficulty in sales because the economy was only growing. As Georgie said, Christoph said, at 7 or 8% instead of 15%. So suddenly its sales growth had slowed down. Suddenly there was a bit more competition. So the sales of this company hadn't been doing so well. Its stock price hadn't been doing quite as well. And it decided that there was an easier way to make money rather than do the hard stuff of invent a new product, do a better job of managing your business and such like. So it's changed its name. It basically changed its name. Its previous name was Cayman Wood Industry, and it changed its name to Zeus Entertainment and advertised itself as a high-tech gaming and technology company on the Chinese stock market. The same day it changed its name, only because it changed its name, its stock price was up 64%. Now, it sort of reminds me a little bit of what went on in 1999 and 2000 and dot-com bubble, where whenever you just had a company which was just ending in the words .com, suddenly its share price would be up 50 or 100%.
It's not driven by fundamentals, that's for sure.
Yeah, and what do we mean by fundamentals then? What does that really mean? Because people can get carried away in, well, if my neighbour's buying this stock and they've made 50%, hell, I want to be involved in that. I've got to make some money as well. So what do people really need to be focusing on? What are these fundamentals that investors should actually be paying attention to? What is it? Is it profit? Is it cash flow? What are the basics of that?
Well, to me, it all comes back to valuations, really. History has shown, and many studies have shown, that the only long-term predictable indicator to markets, to the return that markets are going to give you over the long term, is valuations. We can't tell what the stock market's going to do next week or next month or even in 6 months. And I sit down with people all the time who want to know the answer to that, and none of us can give that answer. But what we can do is look at history and look at valuations. And in particular, I know Christoph knows a lot about the CAPE valuations, which is the cyclically adjusted PE valuations. It's a measure of what a company or what a market's worth. And that's really the only thing that can tell us what's going to happen over the medium to long term. So, to me, that's what I mean when I say we've got to go back to valuations. What are the markets that are relatively cheap and which ones are expensive?
That's fair enough, and we'll have you on again, Christoph, and spend 30 minutes talking about valuations. So be warned now. I'm kidding.
But I just want to add too. I think that we can look at fundamental valuations, and we can look at kind of what drives or historically has driven the market. But one of the big things, getting back to China, is it's not valuation driven at all. It's really, it's really kind of momentum and leverage and everything else that's in the system. But I guess one of the questions I would have, maybe for Christoph, is, how much can we trust the financial system in China, given the transparency issues that we've seen, given them, they even have announced recently that they're halting large institutional traders and directors from selling their shares. So what does that impact have on the everyday investor in Cayman?
Well, and first for the local market, it destroys confidence. If you know you can't sell, then why would you buy? right? So the
And the
people,
sellers aren't going to go away. You know, they'll sell eventually.
they still want to sell, and what happens is they'll sell whatever they can, right? So what we've seen now is the next closest market in Hong Kong, where these same people probably have some shares. They sell there. They say, well, I can't sell in China. Let me sell in Hong Kong. And so in terms of the non-Chinese participant who's looking at that market, it's right now we're in the process of sort of the Chinese market is opening up. They're allowing big institutions to start coming in. Vanguard, they're starting to add the Chinese domestic shares to their emerging markets funds. But when they see things like this, it destroys confidence. And now we recommend to investors to be diversified and across the globe. But, does that include China? Well, maybe. Maybe the Hong Kong version, maybe peripheral markets that will be affected by China, but it certainly doesn't. China has to deal with these issues before the world investor will start to really come in a large way.
And what right now in China are kind of the major industries or stocks that are driving these returns up?
Well, I think it's what Simon said. There's a lot of fly-by-nights, and that's another issue, right? Because there's a lot of financials that are listed. It's not like you can look at the market and see, there's a lot of industries well represented, like in a more developed market. When you look at the U.S., you might have the percentages change from year to year, but you might have financials that are 20% of the stock market. Well, that makes me feel a whole lot better because then the stock market is more diversified within itself. So it's kind of dangerous if you have a large industry representing a large portion of the stock market. I
was struggling over the past couple of days to try and think of an analogy for this as to how to explain it in a Cayman context. Because what frustrates me is that people do ask about how do I invest in China, or should I invest in China? First question, I suppose, is should I? And probably the answer to that is yes, at some stage and in some sort of way. But how do I is a really difficult question, because the reality is the stock market is down about 30-40%. Since its peak, but it's still up about 8% this year, and that's not a bad rate of return. If you could be told at the beginning of the year that by investing in China you'd be up 8% by the middle of July, you'd be thinking, yeah, I'm okay with that. That's a good rate of return. So I was trying to think of how to sort of put analogies together for this. And in Cayman, unfortunately, we don't have many hills. There's not many mountains and such like. So I was thinking, well, it's almost like someone's walking gently uphill. And that's what you expect the slope to be. But then someone sort of accidentally walks into the Cayman Bay multi-story garage, starts walking up the stairs, gets to the top and thinks, well, the rest of Cayman's like this. And actually it's not. What you're basically talking about is the peak that the stock market saw was something that was driven completely unnecessary, completely unexpected. And the reality is the landscape's not normally like that. The landscape's not normally full of mountains and peaks and troughs. There will be. But the reality is stock markets can't go up 60 or 70 or 100% in the space of 3 or 4 months. And people just need to realize that. And if other people are buying, they're the fools. Don't chase people don't do what other people are doing just because they've made lots of money. They're going to be selling when you're buying, and therefore they'll have made all that money, and you'll simply be the person that's allowing them to sell. So it's frustrating to me. And the reality is the stock market is still up this year. And therefore, I sort of look around and say, well, where's this crisis? I don't understand what this crisis is. Christoph, you wanted to say something?
Yeah, let me just give here's some practical advice for someone who wants to invest in China. I'll give you two quick ways. One, if you have a real business that needs a Chinese supplier, obviously that's a good deal. Go into business. If you want to invest in China as part of your well-diversified portfolio, preferably in a low-cost brokerage account, buy the FXI, which is the Chinese ETF listed on the U.S. market, with a small percentage of your equity allocation. So maybe if you have 50% of your assets in stock, put 5% of that or less into your allocation.
Simon, I just want to go back to what you were just saying about percentage returns, because I think it touches on something very important for all investors, which is managing expectations. And I think, that's something that all investors have to be aware, and professionals like us have to be aware of what potential returns can be. And I think now we're in very different economic times than we've ever been in before, with Greece, with China, with negative interest rates in lots of countries in the world. And we have to sit down with people and educate them as to what is a reasonable expectation of returns. Historically, the US stock market's returned 12% per annum since 1926. Now, do any of us think that's going to happen over the next 10 years? Unlikely.
Maybe in 1 year or two.
But, an
Up to
average
10.
return over the next 10 years,
Agreed.
12% is unlikely. So,
Agreed.
and I think sitting down with people and managing their expectations as to what returns might be achieved over, say, the next 10 years is an important part of our role, I think.
That's a great point. And we're just going to take a break. And when we come back, we're going to talk about a little bit about managing expectations. And also we're going to talk about what's going on in Europe. Obviously, the Greek crisis is front and centre of everyone's attention. Not a day goes by, regrettably, when people aren't talking about Greece, when people aren't talking about the chaos, the carnage, the banks. So we might as well talk about it as well, since it is all coming to a head now. So when we come back, we're going to talk about that.
One TradeX knows there's more than one way to invest. One TradeX is the Cayman Islands' only fully licensed online broker-dealer, offering discount trading services to individual investors and traders, hedge fund managers, and family offices. One TradeX has the most competitive online trading prices of any offshore broker worldwide, with no custody or management fees, free demonstration accounts, and no charge to open an account with a $5,000 minimum deposit. Trade stocks, options, futures, bonds, and Forex. Learn more and open your free demo account today at onetradex.com. One TradeX, the Cayman Islands' #1 choice for online brokerage.
This is
Money Sense, bringing an informed financial perspective to the Cayman community. Brought to you by the CFA Society Cayman Islands and sponsored by One TradeX.
And now, more Money Sense.
Welcome back. And as I promised, we're going to go from one crisis to another, and we're going to talk about Greece. And I apologise to everyone on this very pleasant Thursday morning that we're going to talk depressingly about the crisis in China and follow that up with the crisis in Greece. But the good news is the crisis in Greece may be ending by the weekend, which may potentially mean the end of Greece by the weekend. But let's talk a little bit before we focus on what's going to happen. There was a referendum in Greece. Rather bizarrely, the referendum was on a question that wasn't actually available to be answered. In other words, the question was, do you accept the terms being offered to you? But by the date of the referendum, those terms were no longer being offered. Nothing goes straightforwardly in Europe, I suppose. Greece voted no to that. Greece then has instructed all its banks not to open, so no one can transfer money. People can only get out 60 euros in currency per day. So how on earth is the Greek economy remotely performing or remotely surviving? Can anyone answer that question for me, or just put into context why we got into this situation, perhaps? Neville, do you want to kick off the discussion on this one?
Yeah, I mean, how it's operating right now, I think it's not. It's at a complete standstill. I mean, we've all seen the photos of, the hordes of people standing outside of banks, waiting to get cash out, if they can even get cash out. I think there's terrible uncertainty with respect to, the financial system, whether or not, if food's going to be available, gasoline's going to be available. It's tragic, and I think that's why we're hearing about it daily. Now, how did this transpire? I think there's multiple people to probably blame in this instance. I don't think it's necessarily the Greek government or the European Central Bank or the IMF. It's a combination of probably both parties, and I think inevitably, borrowing too much money. The Greek government and the Greek people have way too much debt, and the fact comes down to they're really not able to pay it back. And I think unless they can come to some sort of agreement with their creditors on how they repay, or whether they extend terms or reduce the interest rate, or take some sort of haircut on debt, the Greek government and the Greek people are going to continue to kind of kick the can down the road and be in this predicament.
Well, I think there's a lesson here for individual investors. If you as an individual investor are looking to make an investment somewhere, and you see two countries or two people or two companies both offering the same sort of rate of return, offering to pay you 5% interest, and one's not borrowed anything so far, and the other one's borrowed 3 or 4 times their annual profitability or their annual earnings, whatever it might be, why on earth would you lend to the one which has borrowed so much? Why would you lend to the one whose job is at risk, who isn't doing very well? You lend to the safer country. So actually investors are partly to blame for this as well, aren't they? Because Greece can't borrow this money unless people actually lend it to them. And so there's a greed element here, in the sense that a lot of investors have thought, look, Greece is part of Europe. The rest of Europe will, to use this cliche, bail out Greece. And therefore it's perfectly fine for me to lend money to Greece, earn my 7, 8, 9, 10%, because Germany or France or Italy or Spain will help out Greece, despite the fact that it's a different country and they have no obligation and no necessary need to do so. So I think investors, when they're looking at Greece, need to think to themselves, it's not a question of Greece necessarily doing bad things, and they've done a lot of silly things as a country, as a government, but it's also a question of investors need to be more responsible into how they invest. Someone who offers you a high rate of return isn't doing so out of generosity of spirit. They're doing so because they're a much riskier proposition. And if you want to lend money to a country or to a government or to a company, and they're going to pay you twice what everyone else in the world is willing to offer, well, the presumption should be and must be that they're at least twice as risky as everyone else, and there is a risk that you may not get your money back. And that, I think, is something that a lot of investors who are agitating for this to be resolved haven't quite been honest enough with everyone and said, well, look, for 2 or 3 years I was earning this high rate of return, so there is risk and there are risks associated with that. That's just a little bit of editorializing on my part, so I apologize. But in terms of the Greek economy, this weekend is when it all comes to a head, in terms of the ECB and the Eurozone governments have to decide whether they're going to extend terms to Greece. So what happens under either circumstance? Presumably if they extend terms, then Greece stays in the euro. If they don't, Greece is printing drachma again. Is that right? Am I going crazy in this respect?
Well, no, that's completely right, Simon. What's going to happen, I don't think anyone knows. No one can know whether the negotiation is going to be successful or not. But I think we have to remember that what markets hate is uncertainty. And, we've had Greece hanging over us for 5 years now. I saw one commentator call it the slowest moving train wreck in history. It's just gone on and on and on. And I think we need a resolution one way or the other, and that hopefully will calm the markets, and we might then see Europe resume its rally afterwards. Now, in terms of the actual practicalities of Greece moving to a different currency, it's a huge undertaking for a country to change its currency. The logistics of printing new money, designing new money, having security experts, ensure that the notes can't be forged. This is a process that takes months and months and months. It's not something that can happen overnight. So, if Greece go that way, it's going to be a long and painful process.
Perhaps Greece should just rather than print its own currency, start printing euros, and see where that gets them. But
well, it's been discussed, and then they would just issue Greek euros and they trade it at a discount. So maybe your Greek euro would be worth 80% of the euro, something like that.
Is that? I don't know if I'm being a bit crazy here, but is that a serious point? Every euro that's issued has on it a bridge, and this is a bit of a quirkiness to you, but when they were designing the euro, they're trying to work out how to demonstrate togetherness in Europe and such like, and they decided that bridges were a good sign of togetherness and connectedness. So every euro note has a bridge on the other side of it. Now, that bridge is of the country, or from the country in which the note was actually issued. So you do get French euros, you do get German euros, you do get Dutch euros, you do get Greek euros. If people actually have Greek euros in their wallet, do you think there's a risk that those might actually be worth something different tomorrow? Well, not tomorrow, but next week, to that which a Spanish or German euro is worth? Or are you talking about?
In my opinion, yes. The other way, I guess, if the more technical, I guess the general public would. I actually didn't know, but that's interesting. But also on the serial number, I think the first or second digit tells you which country it was printed in. Also, and to tell you the truth, if I was there and I had concerns about my cash, and let's say I had taken my cash out of the bank, I'd prefer the non-Greek euro. I would look at it, and it would be an issue, because that is a definite one of the possibilities. Let's say they print those euros in Greece and say, okay, we're going to print these, and people start trading them at a discount. Well, it'll be called the drachma on the street, right? But it'll look like a euro. You just have to know which euro it is.
And no one wants drachmas in their pocket.
No one wants the drachma. but they already have printing facilities. That's one of the things. So Georgie was talking about the difficulty. One of the ways to get around that is just continue printing euros, which they do in Greece. They just have to put that bridge and that serial number on there. So they'll print it. It'll look like a euro, but be a drachma based on the serial numbers. And so of course they'll trade at a discount. And I would rather have the German euro.
So one lesson perhaps to learn from this is if you have been to Europe and you've been to Greece, just think about that in the context of what it might mean from a risk factor for you as an individual. Those might be worth less than a corresponding euro from a different country, different European country, at some point in the not too distant future. I mean, there is of course the possibility that Greek resolves things, but I don't want to bore people with statistics, but I want to put just a couple out, and then we're going to talk just for a couple of minutes a little bit happier news, hopefully. But Greece, just to put this into context, I've heard people say, look, Greece is being picked on by the Germans, Greece is being picked on by the IMF, Greece is being picked on by the European Central Bank, and yes, Greece is being picked on in some respect. But the Greek government does have some burden to bear here. Greece has a 26% unemployment rate. The GDP, so the economic growth in Greece, has been negative in real terms for each of the last 7 years. Wages and salaries in Greece have declined for each of the last 5 years. In 2012 and 2013, the average salary in Greece was declining by more than 10% each of those 2 years. Just think about that as an individual, where for 5 years your actual salary is cut every single year, and in some years it's cut by 10 or 12%. Greece has total debt equal to 180% of GDP. This is after having done a resolution about 4 years ago where they reduced the amount of debt. The next worst in Europe is Italy with 134%. So it's way out there. Yeah. And it's had negative industrial production for 7 consecutive years. So Greece, as a country, as a people, as a politic, has its own problems that it needs to resolve. But rather than ending on a rather depressing note, Georgie, you I think wanted to say that although Greece is a problem, it's 7% of European GDP, you actually think that the European opportunity as an investor is not yet done. Is that fair to say?
Yeah, I feel still, relatively positive about Europe. Going back to valuations, there are many markets in Europe that are still, cheap, maybe not, but fair value as opposed to expensive. Yeah, cheaper, says Christoph. And I think Europe has been showing quite good signs of recovery. We've got Eurozone inflation returning to healthier levels, and loan demand there's been picking up. That's been something that's been lagging in the recovery over the last few years, so that's a big thing. Money supply is at the highest level since 2009. So I think Europe and of course, one important thing that we haven't really touched on is the currency. Of course, the euro's depreciated, which is actually great news for European countries who are selling, large percentages of their goods outside of Europe to the States or to China or to other parts of Asia.
Yeah,
so
Mercedes are cheap now.
Exactly. So that's a great driver of corporate profits in Europe, which should help see the stock market move forward.
And great perhaps for people who want to vacation in Europe. I mean, perhaps wait a few more months before vacation in Greece, but there will potentially be some real good bargains to be had for vacation holiday spots over there, or in Spain or in Italy or in France, because the euro, as you say, is relatively cheap now compared to what it was a couple of years ago. Neville, did you?
Definitely. Well, I was going to say, just you touched on a lot of the statistics about Greece, but I think it's good putting Greece in a context, because Greece makes up 2% of the euro GDP and I think 0.2% of the world. So it's not a huge part. I think where the bigger concern is with Germany and the other large European countries is the contagion effect of Greece exiting and kind of the rebellion of the government vis-a-vis the European Union and the ECB.
But almost Europe would be stronger were Greece to exit, of course.
But it sets a precedent, doesn't it?
But does if Greece go, does then Portugal say, well, we're just not going to pay our debt? And then they leave? Does Spain do that? Does Italy do that? Yeah. So I think that's the biggest concern.
That's the risk.
Yeah. And that's what, I think if it was just Greece leaving on their own, I think Germany and the other large ECB countries would be more than happy to see them go. But it's the contagion effect of that.
Got you. Well, ending on contagion rather makes me a little bit more depressed than I started this morning at. But I think we'll sort of end with the note that once this is resolved, collectively we think that Europe has a more interesting place to be from an investment perspective, because there's interesting things and constructive things that are really going on there. There are many problems in the world, the Chinese problem, the Greece problem. We haven't even talked about Puerto Rico trying to default on its debt, and there's a lot of debt that they're trying to default on. But those are problems which, to my mind, seem manageable. We haven't got any more time for this month's show. Next month, I think we're going to try and talk about the pension reform that's been proposed and suggested, and we're going to talk about pensions and talk about longer-term retirement saving and planning. I think that's the intention. So we'll pause and we'll end this show here today. And thank you everyone for joining, and look forward to seeing everyone and speaking with everyone next month. And thank you, and good morning, everyone.
Thank you.
Thank you.
Thanks.
One TradeX knows there's more than one way to invest. One TradeX is the Cayman Islands' only fully licensed online broker-dealer, offering discount trading services to individual investors and traders, hedge fund managers, and family offices. One TradeX has the most competitive online trading prices of any offshore broker worldwide, with no custody or management fees, free demonstration accounts, and no charge to open an account with a $5,000 minimum deposit. Trade stocks, options, futures, bonds, and Forex. Learn more and open your free demo account today at onetradex.com. One TradeX, the Cayman Islands' #1 choice for online brokerage.
Price Right is Grand Cayman's warehouse shopping superstore, making your dollar go further with huge savings and no membership fees. Get more of the things you use every day at the right price. But it's not just grocery and health and beauty. Price Right has a full range of products from office to automotive, patio furnishings to kitchen appliances, and even electronics. And since warehouse prices mean savings for you, everything is priced right at Price Right, Grand Cayman's warehouse shopping superstore.
And the time by Price Right is 8:01.
The 8 a.m. news is brought to you by Fidelity Bank. Fidelity, we're good for you.
You call that a horror?
Ha, you were scared. I saw you cover your eyes at least once.
I didn't cover my eyes. I was yawning.
Yeah, right.
I'm telling you, that movie wasn't scary. But you know what is?
What?
The fact that you haven't called Fidelity about insuring the house. You know, hurricane season.
This again?
Yes, this again. The last hurricane was a close call. You saw what happened to our neighbors down the street. I don't want that to happen to us. They lost everything.
That won't happen to us.
How do you know?
Because I'm going to call Fidelity Insurance.
It only takes one hurricane to stir up a financial disaster. Protect what matters with Fidelity Insurance.
This is Radio Cayman's news. The biggest stories right now.
Good morning from Radio Cayman's newsroom. I'm Dion Anglin. It's time now for your Thursday morning news. The Youth Ministry announces its latest recipients of recognition in the Proud of Them initiative. Radio Cayman's Shanda Gallego has the details on Wednesday's reception held in their honor at the Georgetown Yacht Club.
For the next 6 months, 12 new youngsters will be the face of several billboards across Cayman as part of the Proud of Them initiative, an initiative that pushes to the forefront the positive flip side to the young people, their focus and potential in various areas of their lives, such as academics, sports, career, culture, business, or community service. First things first, opening remarks by Youth Minister, the Honorable Osborne Bodden.
I'm proud to be Minister at this time and to know that we are working hard to encourage you and to show you that there is a real reason to be a role model. Thank you for what you have done. Thank you for what you have achieved. Thank you for what you will achieve. The spectrum is wide, and we all play a part in this community. So really want to say very, very proud of you. Proud of that.
The 2015 Proud of Them honorees are Ashley Amador Reinkin, Abhijit Anu, Victoria Buttram, Melanie Lee Ebanks, Rochelle Gardner, Shanna Linwood McLaughlin, Kristen Powell, Chanel Scott, Shante Smith Johnson, Janelle Taylor, Nathan Whitaker, and Romaine Williams. Catching up with some of the honorees.
My name is Victoria Buttram.
First of all, how do you feel?
I feel great. It feels good to know you've been recognized for doing something positive. hard work pays off.
Ashley Amador Rankin. It's amazing to be honored and to be recognized for what you've done.
My name is Chanel Monique Scott.
And how pleased are you to receive this honor?
I am very grateful for this opportunity. I'm surprised, but grateful nonetheless.
Reporting for Radio Cayman News at the Proud of Them Awards ceremony, I'm Shanda Gallego.
Thank you, Shanda. Along with their Proud of Them certificate, each recipient receives a $500 stipend. Officials say billboards will be on display as early as today. For a full list of honorees, head to Radio Cayman's website. In other local news, Cayman Airways increases La Ceiba flights for the summer. The schedule for the new Wednesday flight is the same as the year-round Friday and Monday La Ceiba flights, departing Grand Cayman at 1 p.m. On the return, the flight leaves La Ceiba at 2:25 p.m. The trip only takes 1 hour. For details and to book La Ceiba flights, call Cayman Airways reservations on 949-2311. And with a look at what's happening around the Caribbean, here's Carib Updates' Oslin Crosby.
Guyana's minority opposition People's Progressive Party has again called for the removal of the chairman of the Guyana Elections Commission. General Secretary of the PPP Civic, Clement Rohi, said his party believes that Chairman Steve Surge Bally should be removed before local government elections. Rohi has described the chairman, Steve Surge Bally, as someone that cannot be trusted. He said if Surge Bally is to remain in office for the local government election, his party will not participate.
The PPP wishes to state categorically that it is ready to contest these elections as provided for in the new laws whenever enacted. However, it wishes to restate its position as regards contesting any elections with Surge Bally still ensconced as chairman of GCOM.
General Secretary of Guyana's opposition PPP Civic, Clement Rohi. Amidst opposition concerns about the late issuing of the writ ahead of the September 7th general election in Trinidad and Tobago, political scientist Hamid Ghani had dismissed the concern, saying it's no big deal. He said the fact that writ has not yet been issued is not unusual. According to Ghani, this has happened before.
I was a little surprised, actually, because both Mr. Imbert and Mr. Khan ought to know better, but it was just the two of them. I'm sure that there are other members of the PNM who know this very well, and certainly Mr. Manning, had he been involved, he knows this very well.
In international news, a major inquiry into child sexual abuse has formally opened with a warning that a crime had left permanent scars not only on the victim, but also on society on a whole. Judge Lowell Goddard from New Zealand was asked to chair the investigation following claims of an establishment cover-up. She said no one, no matter how powerful, would be exempt from answering questions.
We must investigate local authorities, the police, the Crown Prosecution Service, the NHS, the media and the armed forces. And we may have to challenge powerful private interests. We have the tools we need to get at the truth, and we will not hesitate to use them.
And millions of people trying to get to work in London have suffered major disruption to their journeys because of a strike by chair workers who've walked out in a row about nighttime services and shift patterns. First Grey Western services linking South West Wales and London are also being disrupted by separate disputes. These commuters at London Paddington said their journeys have been miserable.
It's horrible trying to get to work. It's awful. Because I live in Essex, so it's really, really difficult. I'm a nurse, so I'm completely late for work now.
Well, I normally get the tube. I've been trying to get the bus that's taken me just over an hour to get from Victoria to here.
And what was the route like on the way?
Packed.
Very crowded. And I tried to get on 2 buses, but I couldn't, so I'm walking now.
And that'll take us out of Radio Cayman's 8 o'clock morning news. I'm Dion Anglin.
The 8 a.m. news is brought to you by Fidelity Bank. Fidelity, we're good for you.
Hey, how's the construction coming?
Just about done. I'm having hurricane impact windows installed before the season starts.
You know, they say it's not going to be an active hurricane season this year.
I heard, but it only takes one. I'm still recovering from the last hurricane. This time, I'm making sure my property is secured, and I got insurance from Fidelity Insurance Brokers. Oh, there's my windows.
Whoa, those are definitely heavy duty.
Hey, I'm not leaving anything to chance. Why do you think I chose Fidelity Insurance for my hurricane coverage?
For more information on Fidelity Insurance, call us today at 949-7822.
Further information at www.radiocayman.gov.ky. Play your part in giving information. If you see news happening, contact our newsroom 949-7799.
With your latest news, I'm Shanda Gallego.
Radio Cayman News, the ultimate in news and information.
Asian stock markets have rebounded, led by gains on China's main index, which jumped after government measures aimed at stabilizing the market took hold. The Shanghai Composite surged 6.8%, while Hong Kong's Hang Seng rebounded 4.8%. European markets are posting solid gains amid hopes Greece will finalize a plan of reforms. Major U.S. indexes fell Wednesday on worries about China and the logjam in talks between Greece and its creditors. Investors will be focused today on the weekly jobless claims data from the Labor Department. Also today, Freddie Mac will release the weekly mortgage rates, and the International Monetary Fund will issue its latest outlook for the world economy. The earnings season will crank up today with PepsiCo and Walgreen Boots Alliance reporting quarterly results before the opening bell. And the recalls at Honda over defective Takata airbags have grown by another 4.5 million vehicles, but none of them are in North America. The recall extends the manufacturing period to 2007 through 2011 from the previous 2004 through 2006. Honda has been the automaker hardest hit by the airbag issue, recalling some 24.5 million vehicles.
At Kirk's Home Center, we can make your life much better. We got it all. We got a great deal in store for you.
This July at Kirk Home Center, jet away on vacation in comfort with a gel travel pillow for $10.50. Keep drinks cool in a 9-quart cooler from Igloo for $24.10. Enjoy summer on your next to new deck after refurbishing with 20% off deck and concrete liquid armor resurfacer. And save almost $200 on a portable generator.
Kirk's Home Center, you got a great deal.
A pleasant good morning, 10 minutes after 8 o'clock. Time now to give you the latest weather report. Presently, it is 84 degrees. Relative humidity is 82%. The barometric pressure is 30.01 inches and rising. The wind is out of the northeast at 8 knots, and the overnight low temperature was 81 degrees. Synopsis indicate isolated showers coupled with moderate winds and seas expected to continue over the Cayman Islands for the next 24 hours as a tropical wave moves through the area tonight. Now, the forecast for the Cayman Islands for today is calling for partly cloudy skies with a 30% chance of showers. Temperatures will rise to the low 90s. Your winds will be easterly at 10 to 15 knots. Seas will be moderate with wave heights of 3 to 5 feet. Tonight, partly cloudy skies with a 30% chance of showers and temperatures falling to the upper 70s. Your winds will be easterly at 10 to 15 knots. Seas will be moderate with wave heights of 3 to 5 feet. Low tide will be this morning at 10:43 and a high tide this evening at 5:34. Low tide will be again tonight at 11:39. The sun will set this evening at 7:08 and will rise tomorrow morning at 5:54. And the outlook is calling for similar weather conditions through Saturday morning. And that's the very latest on your weather report.
Here for you, guiding you, at work for you. RBC's committed to you. Right advice, service with a smile. To help you strive, we'll go the extra mile. It's all about you. You're who we do it for. It's all about you. You're who we do it for.
Working for you, focusing on you, and dedicated to you. At RBC Royal Bank, it's all about you.
The People's Progressive Movement invites everyone to their National Council meeting on Monday the 13th of July, 7 p.m. at the Cayman Islands Seafarers Association Hall, located on the corner of Victory Avenue in Prospect. Topics to be discussed include the recently approved 2015-2016 budget, the government and Cayman Compass, one person, one vote, the cruise ship berthing, and airport redevelopment. Stay informed and don't miss the Progressives National Council meeting on Monday the 13th of July starting at 7 p.m. at the Seafarers Hall. The Progressives for love of country.
Wherever you go in your big wide world, watch the big movie. Catch the big match. Hear the big hit. Get the big news. Find the big deal. Plan the big trip. Listen to the big laugh. See the big smile. Get the big break. And always tell your story. Big your life with mobile data from Lime. Upgrade to mobile data now at any Lime store or lime.com/data.
In this morning's sports, Cayman's female track and field starlets blazed the trail in the field events at the 2015 NatWest Island Games. Danellis Thomas won gold in the women's javelin and Lacey